Warm greetings, billionaires. This is Mr. Masiachengo. Again, we are preparing for our final examination. So I want you to get your pen and your paper, and we are focusing on budgets today. Let's see our success criteria, what we are supposed to cover today. A, we are supposed to define what a budget is. Then we explain the three types of budgets. Then we analyze the benefits and limitations of budgets to a company of your own choice. Then the last part of today's lesson is I want you to evaluate the usefulness of budgets. This is a typical examination question. So that's today's lesson plan. And our key terms for today is we need to be in a position to define what is zero budgeting, flexible budgeting, incremental budgeting, and variance analysis. That's today's key terms. So by the end of the lesson, make sure you are in a position to define those key terms. So I hope you have taken down the lesson plan. Our focus for today is understanding budgets. Okay, so I think we can start. I think you are ready. We can proceed. What is a budget? In simple terms, a budget is a plan of sales, income, and expenditure for a set period of time. So in simple terms, we're saying a budget is more of a management plan in monetary terms. So if managers plan in terms of money, it becomes a budget. So in simple terms, we're saying a budget is a plan of sales, income, and expenditure for a set period. So usually a budget runs from a certain date to up to a certain date. For example, a budget can run from January up to December. It's a budget, so it must be for a set period. Let me get my pen also as you also write, and I highlight the key terms. Okay, so I think it's a plan for sales, and I've started with sales. This is the key principal budget that you are supposed to prepare. You prepare the sales budget first. So it's a plan for the sales, the income, and the expenditure for a set periods. Usually these budgets, they run usually for 12 months. Okay, usually we prepare budgets for 12 months. Okay, then also today we are supposed to be in a position to understand three classes or three types of budgets. We've got what we call incremental budgeting, flexible budgeting, and zero budgeting. So, or in simple terms, we're saying we have an incremental budget, a flexible budget, the zero budget. So I want you to pause the video and then I want you to write notes, okay, on what is you discuss. Maybe let's start with discussion. I want you to discuss what's an incremental budget, what's a flexible budget, then the last one is what is a zero budget. Okay, pause the video and you discuss with your neighbor and you see how we can go through that. Okay, this is the activity and I've given you some clues or tips for you to work with. Explain each budget. The first one is incremental budget. We are saying it uses last year's figure. So we are saying when we are budgeting, remember when you are budgeting, we are putting management plans in monetary terms. So if they're in money terms, it becomes a budget. So for example, you can have a budget of $60,000. You can have a budget of 50,000 units. Okay, so what is an incremental budget? So we're saying an incremental from the word increase, incremental from the word increase. So in incremental, when you're setting a budget using the incremental approach, we're saying where is last year's budget, and let's use last year's budget, then we adjust for other changes, then we come up with a budget. So I want you to discuss, but this is a clue that I want you to focus on. Then also on flexible budget, we are saying vary when sales or production vary from budgeted level. So a flexible budget is a budget that is allowed to change. Okay, it's different from a fixed budget. It's a budget that is allowed to change when the sales or production level varies from the one that you had budgeted for. So I want you to get your notes, then you research on this one, okay? But let me give you a hint, a starting point. Then also on zero budget is drawing the budget from scratch, okay? When you're saying let's do what you call zero-based budgeting, what we are doing in simple terms, we're saying let's draw the budget from scratch, okay? All right, from zero, let's start from zero and draw the budget, okay? We are not using last year's figures, so I want you to write full notes. I want you again to discuss in pairs. Okay, I'll give you 10 minutes, write notes, discuss. Then if you've got any questions, please, you post the question, then we can discuss from there. All right, then you might wonder, why should we prepare budgets? Benefits of budget. Number one, when you prepare a budget as an organization, that can be a starting point, a good base of motivation. How do budgeting or budgets motivate? For example, let's say I'm Mr. Masiachenko and I'm given to prepare the budget for the commercial department from my headmaster. That can make me very excited. That can be a trigger that can stimulate me to work or to tick within the department that I'm operating. So it's we're saying when budgets, usually when they are delegated to junior or to subordinates, it's a form of motivation. And this money, when these junior or subordinates they are involved, they feel they have that sense of belonging and they feel part and parcel of the organization, and that can be a form of recognition, and then that can be a plus to motivation of the workforce. So, and also I think, what are some of the benefits? Why do we pay budgets? We say budgets, they can be a form of target setting. It provides goals to achieve. Remember, individuals, they work better when they've got goals. So if we have a budget, say, let's say our budget is want to sell 50,000 units, okay, or we want to raise $50,000, it means, research has proven that individual workers or the management, they work better when they have got something that they are working towards. Okay, then also we're saying, what is another benefit of budgets? Effective management of cost. We can easily track the cost. We can actually see from our budget that we are overspending, we are underspending. Then we can easily manage the cost. Okay, if there's overspending, it means we need also to tighten the controls in terms of use of finance. Then also we're saying monitoring performance. We can actually use budgets to appraise, okay, or to monitor, to track performance. For example, we can easily arrange for what do you call it? We can get what we call a remedial action whenever we see that there is likely to be a shortfall in terms of cash, let's say in December. We can arrange for an overdraft. We talk with our manager ahead of time and tell them that in December we'll be stuck and we'll be having cash flow problem or working capital problems. So please, can you arrange an overdraft facility for us on 25th December? That can make life very easy. You see, we are planning ahead. We are forced to consider the future in whatever we are doing. So it can be a form of monitoring what? Performance. Then also budgeting or coming up with budget can improve performance. How can performance be improved? In simple terms, we are saying there will be better coordination between departments, the finance department, marketing department, the human resource department, the operation department, or there will be better coordination, and that can improve what? Performance. Coordination better. When people are coordinating better, it means then there is a high level of cohesiveness, then there's team working, then we're good to go. Then we're saying, whenever you prepare budgets, what are some of the benefits? It helps to identify the problem through variance analysis. Remember, when you are doing variance analysis, we are comparing our actual results against the budgeted results. Then we try to identify, why did we have an adverse variance? Why did we have a favorable variance? Then it means we can easily identify the problem using the variance analysis. And we say variance analysis, we are comparing the actual figures against the budgeted figures, and then we try to examine the cause of that variance. Then these are some of the uses of budgets. But also budgeting has its limitation. Usually usually focused on short term. I told you when we were starting the lesson that usually these budgets are prepared for a period of 12 months. You see, a period of 12 months for a business that is going to operate for the foreseeable future, that is a short period of time. So at times when we focus with the 12 months, at times managers, some short-sighted managers, they can concentrate on achieving targets that are within the budget, then forgetting the long-term aspect of the business. Then at times may be unrealistic if you said by top management. Remember, let's say we've got multinational companies where budgets are prepared, and let's say at the mother country, then it means this budget then are cascaded down to us. Let's say, for example, the head office of Coca-Cola from United States of America, then trying to push the budget to Zimbabwe. That can be something else in Zimbabwe. Remember, in Zimbabwe, we are using Zim dollar, we are using the RTGS figures, and they bring their US dollar budget. That can be something else. So we're saying it can become unrealistic if there is what we call top-down budgeting. That can be dangerous. Then also biases of setup. Obviously, whoever is preparing the budget can have some biases. There can be a situation where the budget favors more those who are in the marketing department, the production department, or even on the IT team. So they can be biases from the setup. Then also may not account for external changes, for example, an anticipated inflation. I think it's a typical situation that we have in Zimbabwe. You can wake up and find that the prices have gone up, the price for fuel has gone up, price for the raw material have gone up. So we're saying may not account for external changes, especially the unanticipated, the one that you cannot predict. Then also may lead to unnecessary spending if managers have underspent their budget. Okay. Let's say at the end of the year, you were supposed to spend, let's say a finance department is supposed to spend $50,000 on refreshment. Then by 31 December, you still have got $49,000. You've just spent $1,000. I think that can also force the management to try and spend the 49,000. So it can also lead to unnecessary spending if managers, they see that they've been underspending. And it's almost the end of the year, and the money is supposed to be returned to the treasury. Okay, then also it's difficult to set for a new project. Budgets, we're saying they are very useful, but at times when you're setting, you have got a new project, something that is unique, it's difficult to come up with a budget. So it's a limitation. It's a good process, but it can be a limitation when we have a new project. And usually when we have a new project, we draw a budget, then we try to revise it, and then we revise it. It seems as if we are operating without a budget. So I think these are some of the limitations of budgets. So I'm expecting you also to give your own opinion in terms of budget. Is this a necessary activity? Do we need to come up with a budget? Okay, setting out budgets are an essential part of controlling expenditure within a business. That's your own opinion. Your opinion, you can say, this is a wonderful way of controlling expenditure within a business. Then you're saying without figures, it becomes difficult to monitor progress. So at least if you know that this is the figure that we have been targeting to achieve, then what's next? What have you achieved? Then it becomes easier. Then we're saying without a budget, who will decide who gets what? At times it's very difficult. We've got the finance department, marketing department, operations department, the IT team. Everyone is demanding demanding the $50 that we have. So without a budget, who then decides who gets what? So I think it's a good tool. Okay. Then also gives a sense of responsibility when it's agreed upon. So when you agree that this is your budget, finance department, this is your budget, marketing department, this is your budget, it gives a sense of responsibility to whoever has that budget, who has prepared that budget, then that's fine. So I want to pause the video. I want you to give me your opinion. Is this a necessary activity? Should we set budgets or not? Okay, so usefulness of budgets. All right, budgets are of little value if a department heads are not involved. Merely handing down budgets to managers may prove to be detrimental. Obviously, you can see that usefulness may depend on. We're saying usefulness of budgets. Are these budgets useful? Yes. Then when you're doing your evaluation now, this is an evaluation question, right? When you're doing your evaluation, you need also now to tell to point the marker that you are evaluating. So how do you evaluate? You're saying the usefulness depends, number one, on who created the budget. Okay, if the budget, we said, we agree that if the budget was prepared by the top management and then handed down to those to the subordinates or head of departments, then at times, they don't have the sense of responsibility, then they start questioning. But if they prepare the budget, then it becomes useful. Okay. Then also it depends on the accuracy. Some budgets, for example, let's say it's a new project. The level of accuracy in budgeting for a new project, I think you see it's questionable. So it again, the usefulness depends on the level of accuracy of the figures that are there. Imagine that we put 20,000 today, and then tomorrow we say it's $1. Another day we say it's $50,000. Then the accuracy is questionable. Then also it depends on the flexibility within the budget. Okay, remember the business environment is a dynamic environment. When events, when the situations, when transactions are changing day and night, it means that if there is no flexibility in this budget, in the budgeting process or in the preparation of budgets, you will see that the budget will not become relevant. Let's say it's a hyper inflationary environment, that can be a difficult situation to operate with a budget. So if the budget is not a flexible budget, if it's a fixed budget, then it becomes a tricky budget, then the usefulness becomes what? Questionable. Then the last part, whether management takes them seriously. We are, particularly we in Africa, we are used to coming to drawing these budgets, then we ignore this budget. So also the usefulness depends on whether the management, they take this budget seriously. At times we prepare the budgets and then the management does not take the budgets as a serious tool, then it becomes what? Useless. So it depends on the usefulness. So I'm expecting you to answer this question after following this video. Evaluate the benefits of using budgets to a company of your own choice. Remember, to a company of your own choice, I'm expecting you to pick a company of your own choice. Then you evaluate. Evaluation, I'm expecting you to apply these skills. I want you to display knowledge when you are doing evaluation. I want you to display knowledge. I want you to apply. I want you to do analysis. I want you to do the last part of evaluation. So we're saying, what are you expected to do when I say evaluate? I'm expecting you to show knowledge. How do you show knowledge? I'm expecting you to define a budget, to state the types of budgets, and also to explain variance analysis as a tool of what? Of budgeting or budget preparation. Then in your application, I'm expecting you to write answers in context. Remember, to a company of your own choice, the benefits of budgets to a company of your own choice. Then you write the benefits to relating to the company of your own choice. Then under analysis, I want you to pick a point. Then you break down the benefit. For example, let me pick a point on budget, benefit of budgets. Let's say, for example, budget delegation. Okay, if there is delegation, remember analysis, I want you to break down into components, then you try to find the link that exists between these points. Let's say I pick a point, for example, budgeting, delegation, budget delegation, right? I think let me make it simple. When you delegate in budgeting, then it can improve. That can be a form of motivation to employees. They feel a sense of belonging, a sense of recognition. Then they, those who have been delegated to work on the budget, they've got better knowledge about what is happening. Let's say it's a multinational company, they've delegated the Zimbabwean office to come up with a budget. That is a form of motivation to the management, to those who have been given that, we have been assigned that task. Then also there is a situation of coming up with a realistic budget, since this is a budget that is prepared considering the situation at hand. Okay, then also it helps to set realistic targets that can be used to measure performance, and also that can also improve efficiency. And then we can also easily do our variance analysis. Then we compare what happened and what we had planned. So you see how I'm breaking down the point. You pick the point, you break down, you try to find the link. Then on your evaluation, I want you to explain the usefulness, the benefits, evaluate the benefits. So the usefulness, we're saying now, we're now trying to balance the essay. We're saying now the usefulness or the benefits of a budget depends on who created the budget, all right, whether the manager takes them seriously, on the accuracy, on the flexibility, since the business environment is a dynamic environment. Then the last part that I want you to do, if every time when I say discuss, I'm expecting a conclusion. When I say evaluate, I'm expecting a conclusion, your own opinion. Based on these arguments, what based on the benefits, on the limitations, based on the limitations and the benefits, what is your point of view? So I think based on these arguments in favor of budget setting, all business, whether small or big, are likely to undertake some form of financial planning and control. That's how you can conclude that. So that's the end of the lesson. Remember, I want to make it short so that you can easily remember this. So I'm encouraging you to pause the video, take down the notes. This is, let me just go through a recap of today's lesson. Understanding, our focus for today was understanding budgets and our success criteria. We expect to define what a budget is, 3 types of budgets, analyze the benefits and the limitation, then evaluate the usefulness of budgets. So, and the key terms for today, I think you can actually see what we've covered is the definition, the 3 types of budgets that are there. Then also I gave you an activity 1.0, where I'm expecting you to have discussed what is an incremental budget, what is a flexible budget, then a zero-based budget, how do we do it? And I've given you the starting point. When it's an incremental budget, we are using last year's figures. The flexible budget, we are allowing variation in level of sales and production if they exist the difference between what we had budgeted and what has actually happened on the ground. Then it means that flexibility, that flexibility within the budget can also be a useful tool. Then zero-based budgeting, we're saying, let's draw the budget from zero. Then we start to justify each item of income, each item of expenditure into the budget. So that is that. Then the benefits that we've covered today, I think you can see that. Then also on the limitations, these are some of the limitations. Then your own opinion, are budgets useful? So you are supposed to give your own opinion after considering the benefits and the limitations. Then you then decide, are budgets then useful? Bye-bye for now. This is Mr. Masachengo. If you want to contact me, I think you can contact me on my email address that is appearing on your screen. And then if you've got any question, if you have got any contribution, please let's communicate using WhatsApp on that number. Bye-bye for now. We meet in our next lesson. And remember, the best is yet to come. Good day.